The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Hey, everybody. It's Serge Berger here today. I had a little bit of a technical issue, but I think we're good. Can you guys hear me okay? If you could give us a quick yes in the chat box, that would be amazing. And then we are going to get started here in just a second. Again, apologies for the delay. If you just joined us, if you can give us a quick yes in the I think it's the questions box that you have to type it in. If you can hear me okay and you can see the screen, that would be amazing. And I'm going to quickly prepare one more thing here. Yeah, we just have to do a quick audio and visual test. So if you guys can let me know how the audio and visual is, then we should be able to get started here. I had a lot of yeses coming in, which is perfect. So excellent. We are going to get started here in just a second. And again, apologies for the delay. Just technical gremlins, and but we are going to get started here in just a second. Well, we will get on track, so don't worry about don't worry about the delay here, but I'll get you back on track. I'm just checking one more thing here, and then we are going to get rolling here. Markets are under a little bit of pressure again today, which we've been warning about that likely going to take place. And let's check one more thing here. Yeah, good to be here, everyone. Again, thanks for Thank you for being patient. I apologize. It's technical gremlins. All right. Let's get started. I have just a quick example. I wanted to show you. That's why I took a second here to click around my computer. I wanted to show you the sell signal that we received this morning from our algorithm tracker in the S&P 500. Hopefully you guys can see all this. This is the SPY ETF. It's live right now, and hopefully you guys can see those little arrows up here, those two down arrows. Those are basically sell signals we got in the S&P 500. It's basically telling us that algorithms are coming in and selling the market. And of course, since those signals, the S&P is now down, or a second ago was down up to 90 basis points. It was down at 1%, and now it's bouncing a tiny bit. So what I'd like to spend the next 45 minutes or so together is to go through the market. Let's look at how we can track some of these computer programs when they come into the market. Again, this is live. I'm not making this up. This is just a live chart of what's happening right now, and you can see those sell signals that came in this morning. So I just thought I'd quickly share this with you before we get started. Are you guys familiar with computer algorithms, like what that means? Because that's what we're going to talk about here right now. So let's get going, and again, we'll get back on track. So apologies for the computer gremlins. We are going to get started right now. Okay, perfect. All right. Again, thanks everyone for joining. We have a very simple title here. It says chart pattern for the algos, and I think what's important to understand as we'll go through here is computer algorithms are kind of ruling the day. And so, when it comes to looking at the markets, we do need to have an understanding of where the volume is coming from. So this is yours truly, father trader, portfolio manager. I originally come from more of the investment banking side of things, and then moved on to the portfolio manager side and hedge funds and stuff like that. And so, one of the things that I think we need to keep in mind, as I said a minute ago, is that there is a whole nother world out there of the way that institutional investors trade. They have lots of, automated computer programmings, robots, and that's really kind of where this all kind of comes into what we're going to talk about today. I do need to quickly mention the risk disclaimer. This is important. Trading and investing does carry risk, so please make sure you never trade or invest with more money than you can afford to lose. Take it serious. It's a serious endeavor, and educate yourself on this. Don't gamble. Keep the emotions at bay, and anything we're going to talk about here is not at all advice or by any stretch of imagination. All we're looking at here is through the lens of education. So what are we going to do? We're going to explain how these computer algos are kind of ruling the day. And if you've ever noticed this before, you do a trade, and like the minute you do a trade, all of a sudden the trade seems to go against you or us. You're not alone. There's a reason why that happens. It's a lot of times not your fault. It's really because the algos are taking over. So let's talk about this. Computer algorithms it's kind of, it rules the day of trading. Like most trading these days automated, 80% of it. And so, typically when everyone's on one side of the trade, it tends to go the other way. You can see, for example, here, and this is the S&P 500, you can see when everyone was bearish, all of a sudden the S&P 500 took off like a scolded donkey, right? And again, this is where the computer algos come in. And start doing sneaky things and try to take our money. And we can take advantage of that if we just notice that they're coming in. Or this is actually just last year. Remember that big rally that we had for 6-7 months off of the October lows last year? This is our B2 reversal indicator. It tracks when these computer algorithms come in and buy or sell. In this case, they're buying. And on October 31st, which was Halloween, you can see they came in and started buying, and of course the market's been on a tear ever since, off a little bit here over the past few days. It can happen on the upside too. Everyone's bullish, and then all of a sudden things start going the other way, or again, everyone's bearish and things start going up. And so again, the 80% of daily moves in the US equity market, and it's not too dissimilar to other markets around the world, are essentially machine led. And so these are what we consider to be very sort of, powerful Wall Street computer programs, and they're kind of out there to get us. Now, they're not out there, they don't get up in the morning and say, okay, this morning we're going to get Nancy over in Oklahoma. No, that's what they're not doing. What they're doing is they're looking at the broader market, and they're looking at where's the path of least resistance, where can they take advantage of something, where's are people not paying attention, where are they going to be caught long or short, and that's where they can cause, squeezes in the market in one direction or another. I'm not talking about short squeeze, that's a different story, but where people are most vulnerable. And they're very good at that. In fact, they're so good that we need to be aware of what they do so we can jump on their backs, and that's the point. Now, these computer algos, they're very powerful firms behind this. So, if Joe, is sitting at the pool on his laptop on a Thursday afternoon because he has a free minute, he wants to trade, he needs to understand that he's gambling at best, because these big Wall Street firms are way more sophisticated than Joe on the at the pool, poolside trying to knock out a quick trade. So that's one of the reasons why individual traders typically tend to lose money, is because they don't understand the sophistication that's behind it. And so what's an algorithm? It's just that, it's a computer program, if you will. There's an input, which in this case is the price of what the market's doing, and then the algo calculates based on this input what it needs to do: buy, sell, or maybe hold. So if we look at this a little bit more specifically, humans tend to program or develop the code, or at least, maybe nowadays ChatGPT does it for us, or for some people. And then the current market situation will be analyzed by the computer, and then because it's very quick to make decisions and unemotional, it'll then go ahead and execute trades. So this is typically how this works. It's, strategies that are based on this can be very sophisticated. It can also be very simple. Trend following, very simple. Arbitrage and mean reversion strategies, a bit more sophisticated. And then you look at like index fund rebalancings and stuff like that. All that stuff can be automated, and it's basically done by computers. But algorithms can also be found and caught out doing stuff, quite frankly, even by the naked eye, if we just learn a little bit more to kind of understand some simple patterns. And so algos also have a pretty good track record of going for simple numbers. So look at, for example, Tesla. This example here is a few months old, but the point is more of like, look at what it has done. What we can see here is that at the time, Tesla basically stopped at $100. Then it rallied to where? It rallied to $200. Those are round numbers. And then it consolidated, and guess where it went to? 300. So algorithms have this track record of also doing things that by the naked eye can be observed and are very obvious. And so we can profit from this market volatility. And what we can do is just understand that we are kind of built to detect patterns. Most of us, depending on who you ask, it's 60 or 80% of have an easier time learning or understanding something by looking at a series of pictures. And so what we can do is we can use patterns to find when is the market doing something that is advantageous to us taking a trade. Let's just go. I'm going to skip a couple of these charts and just go right into it. So what I'd like to do for the next few minutes is go through and just explain to you what a pattern looks like that we have found a very strong correlation between the pattern and computer algorithms having been behind causing that pattern. Let me repeat this. Unfortunately, the trading and investing education industry has turned into such a freak show in my view, where people are being taught stuff that are not even remotely anywhere near reality. So they'll teach you, for example, about these patterns, and that's not, it's nice to know what candlesticks are. I use them by all means, but let's understand that candlesticks don't just magically appear out of nowhere. It's price action that detects, in our view, what have big institutional players done, algorithms. So in this case, you can see the market went down, and then this hammer candle appeared. Again, the name of the candle is completely useless, it's not important, but just so you know, that's what it's called. And then algos came in and started buying, and then they bought more than the next day, and then it took off. So let's look at this a bit more step by step, and we're going to repeat this pattern here for the next 5 minutes. So by the time we're through the next 5 minutes, you'll probably wake up repeating this pattern in your sleep tonight. So we have a downtrend. We have all of a sudden the market stops going down, but the market didn't go down just because a candle appeared. No, it's because big institutional players came in and started doing something. In this case, they were buying, right? So the education out there is completely, bass backwards. And so hammer candle happened, but why does this happen? It happened because institutional investors' algorithms came in and they started buying a little bit. They were testing the market. Why were they testing the market? Because whatever they detected was telling them that this is a pretty weak spot to catch people off guard and to ramp the market higher. That's literally what's happening. So they came in to test the market. If they like what happened on that testing day, that initial day, they will come in the next day or the next bar. This also works for day trading. The next bar, and they will come in big, and they will cause such a shock to the market that it just screams higher, right? And then you can see in this case, it's took off like a scolded donkey. Let's look at this more. So this is what we call the reversal. Now, again, algos look at a lot of different patterns, and we have various variations of this one, but this is the most obvious one to the naked eye, but that's why we built an indicator that I'd like to give all of you guys access to shortly, that actually does this for us. And so if we just take it a step back and we look at what this looks like on a chart, is on this what's called a hammer day. Again, the name is really not important, so you kind of ignore that, but I need to label it something, so I'm labeling it this. Computer algorithms, they came in, they started buying. And you can see what happened is they started pushing the stock or ETF or futures contract or whatever it is way off the lows. So much so that they caused an initial sort of shock in the markets. Like, why did the stock not go higher anymore? Well, it paused, right? Because some heavy buyers started dipping their toe. And then, excuse me, if the machines liked what they saw, they will come in the next bar, the next day, the next 5-minute bar, whatever the time frame is, and they start really throwing their weight behind it. This is very clearly, undoubtedly, a pattern of computer algorithms coming in and shocking the market and then having it their way. Let's look at a few more examples. So you have a downtrend happening, and then, as we discussed before, what takes place is the market starts going up after the confirmation. So the confirmation is really, really important. That confirmation bar that I just talked about a second ago. Can you all see that? Does that make sense? Right? And then we start breaking higher. It's that combination there is really, really important. The algos need to shock the market. That's what they do best. That's typically where they get an edge. You can see it again here, same exact example. They come in, they do a little bit of buying, they test the market, and then they come in with a vengeance, with force, and they start forcing the market higher, right? That's what happens every single time, and they catch people off guard. And just to kind of explain what this looks like, down here, I bet you lots of retail investors probably were thinking, oh, it's breaking down. It's a breakdown. It's failing support. Well, it's exactly where investors, institutional guys, algos come in and say, you know what? That's the weakest link. Everyone's bearish, everyone's short. Let's take them for a ride. And then we lose money. So it ramps higher. Let's look at a couple more. Same deal, right? ETF, stocks, futures, whatever. It's the same deal everywhere. This thing goes down, market makers, algos come in, they start nibbling, they follow through the next bar because they liked what they saw, whatever that was they liked, and then follows through. Now, we do need to be aware that sometimes we have what's called a failed follow through. Okay, what's a failed follow through? It's simply when the algos didn't fully commit, and that lack of commitment is typically what causes the failed reversal. So again, you can see the trend lower, the market make the algos come in, they start buying, but they didn't commit right away. They skipped a day. They didn't commit until that day after. Now, you can see the market still went higher, this particular stock, but it didn't, it stopped. It didn't last very long. And it's because of the lack of commitment. So we call this a failed reversal because the algos didn't shock the market enough. They didn't commit enough. Same thing here. You can see a downtrend. Again, the algos come in, they buy a little bit, but they don't buy enough because they didn't commit, and then it ends up failing. Again, not a horrible trade. It just didn't last for very long. All right, I'll show you another example. This is a single name stock. You can see the downtrend, and then what we can see is that the algos started coming in, buying, right? They're testing the market. They're seeing how easy is it going to be to shock everyone. And if they like what they saw, what they will typically do is come in and really start to shock everyone even more, right? And this is where they end up taking everyone's money. They come in, they commit, and then as you can see, the reversal is complete. Retail investors are out of money. They lose, they get frustrated, they start gambling, and the algorithms on Wall Street have made a lot of money, right? So that's how it works. And again, it's not because these algos are against you as an individual. They just see what the weakest link is, and they can take advantage of it. So the question now is, what if we can just tell when these come in sometimes? What if then, instead of taking the other side and basically letting them take our money, what if I could go with them? I'll skip a couple things. That's the point. Now, you might ask yourself, Serge, this is nice, but where do you stop out if it doesn't work? Because sometimes it doesn't work. Of course, obviously, this is not perfect. If this was perfect, then A, I'd be lying, and B, then everyone would be doing it. But sometimes it doesn't work. So let's just quickly play devil's advocate, where we have a market setting up so that algos came in and started buying, and then they followed through. But what if they go back to that point of where they started buying, right? We have a no questions asked, very simple, no-brainer stop loss placement at the bottom there where they started buying. Because if this is where they bought and the market for some reason goes back down, this is a no-brainer place where we just get out. Does that make sense to everyone? It's a last resort stop. We don't have to wait that long, but it's a last resort stop loss that's very obvious, because if algos bought there, that's also going to be the last place where they want to get out. Also, sometimes these algos will even flip their position down there. So if they get out, they might even go short down there. So all the more reason to respect that. So a pattern, again, just repeating it quickly so you guys can all see it. Hammer candle, algos started dipping their toe into the market. They come in, they follow through, and it's off to the races. And the stop loss, again, very clear. It's right down there. There's really no questions we have to ask. It's just the stop loss is down there. That's where they started buying. We have found this to be an extremely repeatable process that we can use for investing timeframes, for swing trading timeframes, and also for day trading timeframes. So we can use this for multiple timeframes. It also can be done, and we use it, I should say, for different asset classes, equities, ETFs, options, futures, even crypto. So just to give you a little bit of an idea of what this kind of looks like, This, for example, here is the Russell 2000, and on a daily chart, excuse me, a weekly chart, and there's a couple of variations that our computer indicator, our algorithm picks out. So I showed you the very core, basic, classic setup. There's a couple of small variations of it that our indicator also picks up. And so, for example, this one's one of those on the weekly chart. But again, you can see how algos came in and started ripping this market higher. Here's a daily example on the daily chart on the NASDAQ 100. Again, coming in, exhaustion candle, algos started coming in, they commit the next bar, and it's off to the races. Same thing here on United Airlines. Same thing here on the S&P 500 again. Here's an intraday example, and we'll go into the current market here in just a second so you can see this happening, playing out right now. But here, for example, is a semiconductor ETF, the SMH intraday on a 5-minute chart. Gaps lower, algos come in, they test the market, boom, the next bar, they commit, and it's off to the races. So, you know, it's a repeatable process. We can even use it with like simple trend lines if we want to draw some simple lines. That's where we get even more pop. And, you know, sometimes it's not that complex, but it is important to understand what are the odds. Now, in my humble opinion, it's not worth just trading one stock or one futures contract and focusing on that every single day, because that gives us a low probability of making money. What I think we need to do is understand that there's a lot of different stocks and ETFs and futures out there, and we need a simple way to scan for where are the best opportunities. So we actually created, along with this indicator, a scanner that we can use to find when these things are taking place. So let's have a look at this. I'll show you just a couple last examples before we go into the current market. But here, so you can kind of see how it plays out. You can see the market participants or the algos, they come in, they start selling, the market goes down, then you get an up arrow, algos come in, they start buying, and the same pattern, market goes up and then they start selling again and it goes down. Starbucks, classic sell signal, market drops, 7-8%. This is another stock, classic reversal, algos come in, goes up 12%. Apple, again, these are just some historical examples so you can kind of get your head around it. But what I want to show you here is how this actually works in practice. So instead of just giving you hypothetical stuff, let's actually look at how this looks in the current market right now. So let's go into our what's called the cloud-based version. And if you guys have some ticker symbols you would like to look at, and we'll look at this intraday as well. I showed you guys this morning, just a few minutes ago actually, what the S&P 500 sell signal looked like. Let me show you that one again, and then we'll look at some charts. So if you guys have some ticker symbols, let me know. Like you can see Biogen, for example, we received a sell signal right there in February. It told us that algos were coming in and selling, and then sure enough, the stock dropped, 9 or 10%. I could short the stock at that point. I could buy a put, whatever, something directional in this case. Or a couple of days ago, we got another signal right there. Let's see, DBA. Okay, we got some commodity people in here. That's cool. We got a buy signal in DBA. And we have a simple line we like to use here as like the reference line. When algos come in above that line, that's typically where we take this very serious. You can see this ETF, the DB agricultural ETF, ended up rallying from 22 to whatever, 25 a few days ago. It's now a little bit lower. And I could just buy a call or I could buy the ETF. It doesn't really matter. It's the same sort of exercise. Does that make sense? Yeah, stocks. It doesn't matter. Whatever you guys want to look at, I'm happy. I want to show you this real time. I'm just taking your symbols that you want to look at. I'm not cherry picking here. Yeah. Yeah. Quickly, sorry. The day trading example. That's just for example here. Like this is what happens. Oh, sorry. Where's this chart that I had a split second ago? Here. Like for example, this is excuse me. like this is the S&P 500 here in a 5-minute chart. And you can see, for example, what happened when we got the sell signals, right there. And they told us the computer algorithms were selling, right? So we need to respect that. So why would I start going against those big Wall Street firms if I'm getting sell signals? You know, I think that's a question we need to ask ourselves. These guys have a lot more money than us, so why not follow what they're doing? So that's DBA. Let's see what other tickers you guys want to look at. Urban, okay, URBN, Urban Outfitters. We had a buy signal there, and then the stock rallied about 21%. And again, it's just, look at this. It's the same idea, right? The algos come in, they nibble, and then they commit the next day, and it's off to the races. And they're catching everyone on, off guard. Because guess what? The individual trader at home probably thought, oh, it's about to break support. No, it's not. It's taking off like a scolded donkey because the algos are buying, right? So what if we could take the other side of that? It just makes things easier. All right. Okay, IBM. Let's see here. We had buy signal in IBM. And this was in January. Up like 20% since then. BIIB. I think we already showed that one. Triple D. I don't even know what that is. 3D Systems. So this is like a couple of weeks ago, a little bit less, something like that. We got a sell signal in this stock. This is a $4 stock. So it's a bit low price, but nonetheless, the algos came in. They started selling. Our indicator noticed that, and the stock then dropped like 20%. So I could have bought a put. I could short the stock. Whatever works. We typically go for, depending on the stock, between 5 and 10%, and then you can do a trailing stop. So we don't go from signal to signal. I think that's an important question. FXC. Oh, this is the Canadian dollar. Okay, so if you're wondering about currencies, I think someone asked about currencies before. We got a sell signal there. This is an ETF, and the algos come in, started selling, and we're down quite well in this. What's a currency, right? So they move a bit differently in terms of percentages than stocks. You can't compare that. Ross Stores. Let's see here. Ross Stores. We had a buy signal there, and then it rallied like whatever 10%. And I could buy a call instead of buying the stock. I could buy a put instead of shorting the stock, for example. Energy stocks. Okay, so look at energy, XLE. Got a buy signal there. So this is when the energy stock. So this is important, folks. I don't know if you guys noticed, energy stocks are one of the best performance year to date. And so it all started when algorithms. This is a really important point. Please pay attention to this. Computer algos came in and they started buying, right? This is where the trade started taking off this year. When the algos came in, look at what our indicator told us. Literally as the trade started taking off. Algos came in, they started nibbling, confirmation, and it's off to the races, right? If you want to do some baby technical analysis, you'll see we had a breakout, whatever. You can draw lines a bazillion ways. It turns into a kindergarten exercise. But just know that the algos come in, and this is literally where the buy signal happened. I can show you MPC as well. We also got buy signals on Marathon Petroleum, actually a little bit earlier. Algos started coming in. Our indicator told us, it's starting to buy. So why not respect that? Does that make sense? NVIDIA, sure. Let's have a look at NVIDIA. I don't know when we had a signal there last, but let's have a look. NVDA. NVIDIA. Okay, so there you go. So NVIDIA had a buy signal from the algos in December. So if all I would have done is buy the stock or buy a call or whatever, it ultimately rallied 104%. And also notice where this is happening. It's not because there's a breakout imminent, but typically the breakout happens, within a number of days or a week or two. Algos are coming in and buying. This is where they shock the market, and then they follow through, right? So if I would have done this, I would have gotten ahead of the big crowd. Folks, can I get a quick yes? Is this starting to resonate? You kind of see how this works, how the algos kind of rule the day? Waste management. Another one, algos come in and start buying, and you can see it started to rally. WING, I don't know if we already looked at that one, and I apologize if we did. WING. Yeah, algos come in, they start buying, and then they follow through right there, and then this thing rallied, I don't know, 23%. Again, we typically go with like 5 and 10% increments. That's typically where I like to kind of focus on. And if I buy a call, then yeah. Cool. Yeah, just quickly on intraday, I want to, well, actually, yeah, let's show you this first quickly. Like intraday, it doesn't really matter whether I'm using futures or stocks, but like here's for example, this is E-minis, sorry. So this is like the E-mini futures, for example. Again, it's the same exact thing, right? You have algos come in and they start buying. Actually, hold on, give me 1 second. I need to quickly get the, I want to show you the updated example. My apologies. 1 second. I think that was here. Yes. Sorry, for futures, I meant to show you this. Sorry, I have too many things open and too many charts going at once. But like, for example, here, this is what happened with the algos, right? So you can see there was a little buy signal, and then the S&P futures went higher, and then didn't go much higher, but there was a little bit of buying, and then they started coming in, they started selling, and you can see basically futures are straight down, like 1.25% on the back of that. Does that make sense?
I didn't get that. Could you try?
Oh, my watch is talking to me again. Yep. I'm just trying to read your questions, guys. Yeah, so this is where the sell signal came in, like in the futures, for example. This is a 5-minute chart, and you can, we trail it typically. The algos, we don't know when the algos stop buying. What we do know is they start getting more and more aggressive. So typically a trailing stop works really well with this. What's important is the entry point, right? That's really important. Now that's intraday there, but just quickly, we actually developed this cloud-based version, and what this cloud-based version allows us to do is basically, look for opportunities every day, whether it's, and this is for swing trades, right, on the daily chart, whether it's stocks or individual sectors even. So one thing that you can do is go in and actually get to the point where, let's say you only cared about financial stocks, and within there you only cared about ETFs or let's say insurance companies, right? And then you could go in and it'll give you the latest signals. We typically don't take signals that are more than a few days old. So, like some of these are older signals, but you can kind of see what they were to look like, because people like to back test stuff. So I typically like to just come in here and look for new signals. So Biogen was a new one. We just looked at that one before, right? Or these are sell signals. If I want to look for buy signals, all I have to do is click on that B2 thing, and it changes it from buy to sell signals. And then I that's pretty much it. I mean, really very, very simple to find it. I can also set up alerts. Like if I want to create a watch list, what I can do is go in here and create a new watch list. give it a name, and then add any stocks that I might be watching into that watch list. So let's say I have a watch list, like Surge's watch list. Let's say I wanted to add whatever Cleveland Cliffs to the watch list. I drop it up here, and then if I click on my avatar up here, then I can click on trade alerts, and it's going to set this up so that every morning I get a trade alert emailed to me when there's a new B2 signal. So I don't have to do much, just really just check my email once a day. I typically suggest people go in here and use this because it's helpful to get perspective. But I think at the end of the day, it really comes down to how often do you want to trade? Are you a day trader? Are you someone who likes to look at the market, a couple times a week? These are obviously questions that only you can answer, but I think they're important. So again, like for example, like the market's kind of bearish right now, so I'm really just interested in things that are where I see sell signals, because that's what the algos are doing. So like Archer Daniels Midland, for example, we got a sell signal a few weeks ago, and then we just got one a couple days ago, ADM. So it's literally right there. So if I had this on my watch list, I would also get an email alert sent to me. It's really, really straightforward in terms of how that works. And we typically, again, for the individual stock, we typically go for about 5 to 10% of the initial profit target. We can then trail it if we want to, but it really depends on how active one wants to be. I think that's that's the other thing that's important. I don't show a sell signal in the queues right now. They don't have a sell signal right now. I think there's a lot more individual stocks underneath the surface where there's sell signals, but not yet in the queues. It might show up. I wouldn't be surprised if it shows up real soon here. There's a lot of individual stocks where there's sell signals, so we got a lot of sell signals here recently. So I'm hoping this is helpful to kind of open up your eyes to what some of the algorithms are doing out there, how all this works, and kind of how we can take advantage of of really essentially what is a more sort of holistic way of looking at things. So no, this you can install this indicator on your Thinkorswim and a bunch of other places. I'll talk about that in a minute. This is our cloud-based version. This is meant for the daily charts. This is not for day trading. But you can of course install the indicator on one of your own platforms like Thinkorswim, and in fact I can show you this in a second. I think you can install it on let me share it to you what I think it's Thinkorswim. Let me share it to you. I'll show you in a second actually. Thinkorswim, I think TradingView as well, right? But what's actually really simple, like this is the scanner on Thinkorswim, and I can just click whichever buy or sell signal it is, and then it opens up the chart. Same thing here on the cloud-based version as you saw. But again, for day trading, you do want to install it on one of the broker platforms that it's made for. Sam said that he used to spend about 2 hours a day searching for trades, and now it's like less than 20 minutes a day thanks to the B2. So thank you, Sam. Let me quickly go forward here. Sorry, I'm going in reverse. Yeah, I mean, what I'd like to do is, as I said before, I'd like to give everyone here access to the indicator. For those of people that like, we designed this indicator because we wanted to track algorithms a bit more closely, and that's really what it does. What you're gonna get if you choose to get the indicator, you're also gonna get access to not only the indicator but also the install version. So the indicator, this B2 reversal, can be installed on a Thinkorswim as well, TradeStation, Ninja, TradingView, right? Those kind of places. and you can install it there if you want to day trade, and you can use it like on multiple platforms if you really want to. And of course, you can use the cloud-based version, which is what I would suggest you use, certainly for the swing trading stuff that we just talked about here today. Also, what I should say is the scanning is very straightforward. We just talked about that before. I think it's a very straightforward process. And again, if you're looking for, outside of your technical stuff, if you're looking what's really driving markets, if you're interested in that, I would really encourage you to use the beat to reversal indicator, because at the end of the day, this is what causes markets to move. And we're going to include a bonus here for the first 25 people. We do member webinars essentially every month, one time. The next one here is in the second half of April here, and they always get recorded. They'll be available on the members area as well, which I can show you that quickly if you guys like what that looks like. But it's very, very straightforward to use. Again, there's all the help in the world. Everyone gets an onboarding phone call. The first 25 people are going to get access to the live member sessions as well as the boot camp, which is a video series you can watch. We have a bunch of enhancing setups we teach you as well, but really it's all included in the indicator algorithm itself. So, if you have never used this kind of approach to the market before, and again, of course, you get access to the cloud-based version. I think even this were to cost $4,000, which it doesn't, it would be a steal. It's actually only $397 for lifetime access. That includes lifetime access to the indicator, to the scanner, to the member sessions for the first 25 people. And I'm going to give you the link here. It's studytradersecrets.com/yes. So if you are interested in kind of seeing how you might be able to include what some of these computer algorithms are doing in your trading and investing, then this is, I think, something that I would encourage you to take a serious look at. Again, it's lifetime access. This is not one of those deals that you have to pay something annual or monthly or quarterly or whatever. There are no sneaky charges. It's just that $397 and you're a lifetime member. You can install it on one of the platforms we mentioned. Again, by all means, use the cloud-based version as well. The link is studytradersecrets.com/yes. It's at the bottom here of the screen. Joel also typed it into the chat box. So if you would like access to this now, go ahead and grab that for the first 25 people at $397. There's also a phone number. So if you would like to call in to order, or if you have questions, you can call the phone. Let me quickly give you that phone number as well. It's 401-203-7389. That is the phone number, both at the bottom of the screen and also in the chat box that Joel typed in. If you are wondering if there's sort of hand holding and really showing you how it works, I would encourage you to know that we take this very serious. I don't like giving people half-ass information because it's very serious about being involved in the market. So what you can do is you can set up an onboarding phone call. In fact, someone will call you to onboard you as soon as you purchase. If you're one of the first 25 people that gets in here at $397, and then they will make sure you understand, when the next member webinar is, how to use the website, how to access things. So we take all this very serious. If you need to install it, they can help you with that as well. If you want to, you can also use PayPal, I should say, as well. So when you go to that website, studytradersecrets.com/yes, if you click on that PayPal button on that page, you can use PayPal. I think they even allow you to finance it. PayPal does, not us. And it's all lifetime, right? So whether it's the indicator, the cloud-based version, the install version, the scanner, the course video series on it, the member webinars every single month, 2 times, all that is included. It's lifetime. Again, you just pay it one time and you're a lifetime member. It's really as simple as that. So I would encourage you to grab this as quickly as you can. Again, the link is in the chat box and here at the bottom of the slide, studytradersecrets.com/yes. Yeah, so what do we do in the member webinars? That's a good question. So the member webinars are all about us giving you a new trade idea, basically. So the member webinar happens once a month. We go in there, we show you a new idea, both on the daily chart. If there is one that minute, also intraday. Of course, we teach you how to use it all. And really, it's a repeatable process every month, and the algos are always there. You know, that's the other thing. Computer algorithms are always there. They're always there, buying and selling and taking the money of the retail trader. And it's really not a laughing matter, but it's what happens. And so we want to be cognizant of the fact that that is taking place, and which is really why we designed this indicator, because we wanted to see if we could figure out when some of these guys are coming in, and when not. You know, it's over the years made a big difference. Yep. Cool. Yeah, I'm glad this is helpful, folks. I mean, if again, whether you want to day trade with it or you want to swing trade with it, I just believe it's important to understand that computer algorithms are you know, big Wall Street firms. They're the ones that dictate, and the institutional guys are the ones that dictate where the market goes, and they use algorithms for buying and selling. So if we can detect when some of these guys come in, we have a big leg up on them, right? So I think that's really what this is all about. So make sure you get this before the 25 slots are up. If you have to run right now to a meeting, or you have to go, you know, play golf or whatever you have to do, what you can do is you can put your name and phone number in the chat box, or you can just write the word steady, STEADY, into the questions box as well, and then that someone will that A, reserves your slot, and B, one of our guys will call you then and, you know, take your order or whatever your question is that you have. So if you have any questions, if you prefer to order on in person, or if you have to run and you want to reserve your slot, just type the word steady, STEADY, into the questions box. That will make sure that you have your slot saved. So next member webinar, yeah, the next member webinar is coming up the second half of April. It's coming. It's actually just around the corner. If you missed it, then the recording will be there. It's not a big deal. We do them every single month, right? And between that and the phone and the onboarding phone calls and everything else that you're getting here, it's really kind of a no-brainer. Whether you day trade or swing trade, or just want to see when are algorithms coming in, either way. Yeah, the code word is steady, STEADY. Just if you have to run, if you have to go to a meeting or whatever, and you want to reserve your slot, or you want someone to give you a call back, or if you have questions or whatever, anything, if you want to talk to one of our guys, you can just type in steady. It reserves your slot, because the 25 slots typically taken up pretty quickly. And again, it's 401-203-7389 if you want to call in. Otherwise, just type in steady, and they will get back to you as well. Does this work on stocks and ETFs and futures? Yes, I use it on all, to be very clear. I use this on stocks, I use it on sectors, on ETFs. I do a lot of options with it as well. So if we get the beta reversal indicator giving us a signal on a stock or an ETF, I typically will go and use an option. Not always, but I might. And in the webinar, in the member webinars, we talk about how to use this with options as well. I should have mentioned that before. So the member webinars are really important because we teach basically how to use this for swing trading, for day trading, how to use the cloud-based version, how to use it with options, as I said before. So the member webinars are great. Yeah, David's asking a question. David's asking, what's the difference between this one and the Vertical X Pro? A huge difference. There's no similarity. So what this indicator does is, as I showed you guys, let's just bring up an example just so you guys can see. What this thing does is it finds us points in the market where computer algorithms are coming in and either buying or selling. Like, these are the big Wall Street. I think that I've repeated that probably 55 times here today, right? So that's what this is. The Vertical X Pro finds us when there's an extreme overbought or oversold condition in the market where it is advantageous to take the other side, right? And these indicators have nothing to do with each other, completely separate, but they can also be used together, right? That's another great thing that you can do with it as well that I like to use. Even though they're totally different, they can certainly be used as a sort of in conjunction or getting, kind of using them as a process tool, if that makes sense. That makes sense, Dave? And I think Carrie or Cliff or someone before was asking that as well. So hopefully this is addressing the question. They're completely different. So if you think one of them is going to be replacing the other one, they're totally different. They have nothing to do with each other. They take advantage of totally different things happening in the market. Good, it's a good question though. Yeah. Cool. Again, type in the word steady, STEADY, if you have any questions, or if you want to order by phone, or if you want to reserve your slot. Again, if you have to run to a meeting or play golf, of course I understand. But again, at least if you type in steady, the word, then you reserve your slot, because the 25 slots are, I would imagine, probably get taken up in the next, I don't know, 20 minutes or so, 15 minutes. And that way you reserve your slot. Otherwise, the offer ends, and I think the indicator is, I don't know, like double the price on the website. So, $397 is a much better deal. Cool. All right, folks. Listen, I hope it was helpful. It was a great pleasure to be with you here. And if you have any questions, again, just type in steady and someone will get back to you. Or again, you can call 401-203-7389. If you're ready to order, if you want to order and not pay more than the great discount today, just go to steadytradersecrets.com/yes. With that, have a wonderful rest of your day. And for those of you 25 that are going to join, we look forward to seeing you in the upcoming members webinar. Thanks for joining, and we'll speak soon.